in 2025, equity investors enjoyed blockbuster returns across markets. That positive sentiment for stocks extended into the first proper trading week of the new year. But despite the gains, it was not a smooth ride all through. Geopolitical tensions and President Trump's trade brinksmanship and wild policies whipsawed some assets and boosted others. The uncertainty trend is forecast to extend to the coming week with widespread predictions, for example, wild swings. Shifting focus to broader markets beyond stocks, precious metals and oil were the real winners. Gold surged over 4% after marking its best year since 1979 oil crisis. Crude also gained at the start of 2026 on news U.S. big oil firms were reluctant to invest in Venezuela despite Trump's assurances and as protests in Iran escalate. Oil also posted its third straight weekly gain, with benchmark Brent crude rising 3.5% to about $63 per barrel. The dollar gained after economic data nearly wiped off bets for a Federal Reserve rate cut this month. Bitcoin also gained at the start of 2026 to back above $90,500 mark. Now, with major assets covered, let's shift focus to the Asia-Pacific stock markets. The OC stock index was the biggest gainer in Asia with a 5.6% surge. Benchmarks in China and Japan ended last week with over 3% gains. Indian benchmarks were the only exception among major stock benchmarks to close out the week in red. The renewed tariffs worries, valuation concerns, and deep foreign outflows hit Indian stocks. In the Americas, Wall Street risks on fever showed no signs of abating in the new year. In the first full week of 2026, a synchronized cross-asset rally pushed U.S. stocks to close at fresh all-time highs. No single event triggered those moves. Canadian stocks extended gains after setting a record for records in jaw-dropping year. The Canadian benchmark gained 2.8% after marking its best year since the 31% rebound in 2009 from financial crisis. Brazil's Bovespa rose 1.4% to extend a stellar performance in 2025. And looking across the Atlantic, European stocks soared despite political and economic turmoil across the region on hopes of rebound in German industries. The German DAX led gains in the region. European stocks extended their gains after closing 2025 nearly all-time highs, capping their strongest annual performance since 2021. The UK's FTSE rose nearly 2%. The French CAC gained 2.6% despite a budget crisis. Now, having looked at market moves, let's now turn to overall economic outlook now. First, let's take a look at Asia. India remains the best performing major economy in the world despite Trump's tariff rhetoric. The uncertainty from U.S. President Trump's trade policies is weighing on the region's growth outlook. In addition, China continues to battle a property recession and a deep deflation from weak demand. And in the Americas, mixed messages on the macro front clearly reflect a clouded outlook. Big Wall Street banks caution that stagflation risks are on the rise. Trump's trade rhetoric extended to the other economies in the region with a negative outlook for Canada and Brazil. In Europe, the standard norm across the region is a muted economic environment. Europe's growth engine, Germany, is struggling to get its manufacturing activity back on track. GDP in the UK contracted for the second straight month in October, with no growth seen since June. And in addition to those concerns, Trump's trade brinksmanship is hurting the economic outlook for the region.